You're listening to The Weekly Edge, your straight-talking guide from industry experts on what's really moving the fixed income markets, here in Australia and around the globe. Brought to you by Gilt Investments. The Weekly Edge is your go-to podcast for sharp, actionable insights into the forces driving bond markets. Each week, your hosts Alastair Healey and Richard Brennan take you on a fun and insightful romp through the financial markets. With their no-nonsense style and deep experience, they help you cut through the noise. Alastair's deep market smarts and Rich's trend-driven mindset make for the kind of conversation that keeps investors sharp, and always one step ahead. Quick hits, smart takes, real perspective. Let's dive in.
Welcome back to the Weekly Edge. It's Thursday, June the 12th, and if last week felt like a system under stress, this week feels like the wires are starting to fray. We're watching US-China tensions morph from old-school trade squabbles into something a lot more structural. It's not just tariffs anymore. This is looking like a full-blown commodities war. Tech infrastructure, petrochemicals, and rare earths are all now in the firing line. These are the arteries of modern industry, and both sides know it. And then in the background, you've got Elon Musk sparring with Trump, rising anxiety over energy security, and signs that consumers who've held up remarkably well are starting to show fatigue. Feels to me like we're entering a new regime where the risks are more embedded, more geopolitical, and less about soft landings. Al, are we now in a structurally different environment? And if so, what does that mean for how we think about risk from here?
Yeah, good morning, Richo. Yes, I think we are definitely in a structural difference. The world is certainly changing. I think those areas that you just mentioned at this stage, I think they're sort of pawns in the game sort of thing. They're bargaining chips that both sides have got. That they're using those bargaining chips to try and get the edge on the other one. So it's a bit of a butting sort of environment. You know, the economies are still very, very important. And yes, we need those chips, but they're just using them to get the advantage on the other. So you've got one side who really wants to completely turn things upside down, which is the China, Russia, North Korea sort of side of things they are desperately seeking a new world order. And then you've got the other side, which is the US side, really, I think, trying to get back to where they were, which is, you know, the powerhouse, global policeman, global sort of manufacturing. So they're trying to get back to that environment. The end result, I think we're still in early days. I think there's going to be massive structural changes going forward, but it'll be interesting to see where it all pans out. I think in a lot of respects also, most of these governments are running out of capacity. You know, we've geared up. Every country's geared up. Even China's geared up. So, you know, how much capacity has everyone got in order to have these fights? So we'll see where it all pans out. So on the back of that, I think defensive is always going to be the way for the next little while. Musk and Trump, you know, no company in the world would perform if you had that sort of stuff going on. You know, it's like the board arguing with administration with regards to cost, and then administration sort of says, right, we're resigning and leaving. You know, any company would be affected by that. And that's a little bit similar to Trump and Musk. He was put in place to cut costs, and then he walks away, probably because it's too hard. So that's going to affect things.
Let's dig into what might be the most immediate and tangible front in this geopolitical realignment: petrochemical feedstocks. Here's a backdrop for our listeners. Last year alone, China imported more than 565,000 barrels per day of US propane and ethane. These aren't just energy exports. They're the lifeblood of China's massive plastics and chemicals manufacturing base. And up until recently, it was a mutually beneficial flow. US shale producers had a hungry buyer, and China had a cheap, reliable feedstock to power its industrial engine. But now the gloves are off. Beijing just slapped a 125% tariff on propane, effectively choking off the economics of that trade. And in response, The US government has banned ethane exports to China, citing national security. It's not a war of words anymore, it's policy with teeth, and the result? Chinese plants are already idling. US midstream companies are scrambling to reroute flows or shutting capacity. Al, this doesn't feel like a short term hiccup, it feels structural. What are the bigger implications?
Yeah, it definitely is structural. I think this headbutting we're going through between the two big countries. These are the two biggest economies in the world, and both have different strengths. One's the biggest manufacturer in the world, and the other is the biggest consumer in the world. So they're now sort of trying to get ascendancy on the other. So they're going through this process. If you listen to most of the commentary at the moment, everyone's sort of dwelling on the rare earths. And yes, rare earths is really, really important. But unbeknownst to a lot of people and it's just emerged the last, say, week or so, that America's got an advantage on the petrochemical side of things that China needs. So for me, the point here is that you've now got the two biggest economies who are fighting each other have both got a fairly big edge. So that means there's probably more likelihood of good negotiations going on. You actually might get a deal done now because they've both got something they both need. So that's probably a good thing. So once they get an agreement between, supplying rare earths and supplying chemicals, they've both got an edge there, and they're both, one's consumption and one's manufacturing, means that we're probably going to, and I know right now they're in London sort of negotiating, so that if we get an agreement, we can all then move on. The effect going forward is definitely costs are going to be higher, I think, no problems at all. There's no risk. Everything is going to be rejigged, and there's going to be pain. If we have to rebuild supply chains because you've got the two biggest economies headbutting, then that's going to be painful for most people regardless. Everyone's sort of finding out now, who's got what and who's doing what, and the advantages that people have got, and people are sneaking bits and pieces and doing things on the side and not telling everyone. So you put all that on the table, it's going to change the whole negotiations globally, really.
Yeah. Well, if you thought the commodity story was intense, wait until you hear what's happening on the infrastructure front. Paranoia around grid vulnerability has jumped a few notches this week, and not without reason. Reports surfaced that US intelligence analysts have uncovered rogue communication modules embedded in Chinese-made solar inverters, the kind widely used in commercial and utility-scale solar installations across the US. These devices, according to preliminary findings, might be capable of bypassing firewalls and potentially allowing remote access, even shutdown, of parts of the grid. Now, this obviously lights up headlines, but the question is, how much of this is hype? Is it just election season fear-mongering, or is there a legitimate infrastructure risk emerging here? Al, what's your read on this?
Definitely there is infrastructure risk, full stop. The issue here for me is if these two countries are headbutting and they want to, get ahead of the other one. So they want to tear the other one down and push themselves forward as the superpower. So if you're going to trade with each other and you're going to buy, technology from each other, because China's got the manufacturing grunt and the people, so their cost structure is a lot better than America. So if America buys technology from them, whether it's solar panels or whether it's anything, it doesn't really matter. If you don't check it, you know that they're the enemy, and you don't check it, then you're asking for trouble and you're crazy. Even if America bought technology, solar panels from France or Germany, it just makes sense to check it so that you don't have any bugs in it and no one's pulling the wool over your eyes. So to me, that if that is the case, then that's just stupidity on US's behalf. So yeah, they've this, and because technology, the whole industry, the whole development of technology, and if you start to hear about what's going on with Apple and Facebook and things like that, it's just moved so rapidly fast that these sort of issues are going to pop up. So, which is a concern for everyone. It's a concern for the markets. It's a concern for currencies. It's a concern for interest rates because nobody likes surprises. The market wants to know what's going on so it can, value shares appropriately. It's the same thing with currencies. But if you get these surprises because countries have been slack and haven't done their research on purchases and things like that, that just doesn't help anybody. And it's going to, create a lot of volatility for sure.
Well, let's zoom in on China, because while most headlines are focused on geopolitical tension, something equally important is playing out inside its economy, a quiet but intensifying deflationary pulse. China's Producer Price Index, or PPI, fell 3.3% year on year in May, the sharpest drop in nearly 2 years. That's not just soft pricing, it's the hallmark of a deeper industrial malaise. And nowhere is that more visible than in the electric motor vehicle industry. We're seeing a full blown EV price war. BYD is slashing sticker prices to the bone, forcing weak competitors to either fold or consolidate. Even with state support, the oversupply problem is enormous. Plants are churning out more vehicles than the domestic market can absorb, and consumer demand simply isn't keeping pace. It's not just a margin squeeze, it's a race to the bottom. Al, what are we really seeing here beneath the surface?
Definitely, this is to me one of the interesting parts to the whole global, headbutting that's going on, competition that's going on with China being the manufacturing powerhouse and America being the resident number one economy and the huge consumer. I look at China, for example, and they tell the world they're a communist country. They're embracing capitalism, but they behave like a regime. So somewhere along the line, they're going to come unstuck. So, when I think of what's going on there, I feel like, to me, this is a regime that's trying to control capitalism whilst it's still learning how to be a capitalist. So that's the issue with them. The communist country, when you don't have an opposition. So the communist country can make any decision it likes. So whilst it can make long-term decisions that will last 25 years, and they could be good decisions, but it can also make really bad decisions that will last for 25 years as well. So for me, in an economy like that, where the government's is all powerful and has a say on everything, which company does it back? When you've got competition like capitalism, and you've got three or four huge car manufacturers headbutting each other or competing domestically, which company does the government back? So I think that's all part of the whole manufacturing sort of ethos over there. There's no real supply and demand. It's totally controlled by the government. So that's a big problem, I think, from them. And also local consumption for them is not quite where it is. They rely on manufacturing exports. That's where they get the income from. So America's got the consumption down pat, but it's lost its manufacturing to China. China's got the manufacturing, no problems, but its local consumption is not there. So that doesn't surprise me that they're having these issues with regards to manufacturers trying to supply the local market and then having price wars, which is going to be damaging for them. If the rest of the world backs off and stops buying Chinese goods, they don't have the infrastructure locally to do it. So, it's you can't stop. And the flow on from that is that you can't stop the manufacturing. They've got so many people they need to feed. So they're going to keep crunching out manufacturing. That's where they're making their money from. And they can't slow it down. They can't stop it because then they'll have humongous, unemployment issues. So they're going to keep mass producing. And that's what they're doing. So they're getting an oversupply of everything. Cars, anything they manufacture is almost now oversupplied. And they're now trying to trickle it out or dump it into markets around the world, which again affects everything. So, there are big issues that are going to keep coming back to haunt China, I guess, as it copes with embracing capitalism.
Well, meanwhile, over in the US, what might look like a sideshow is turning into a market moving event. Elon Musk and Donald Trump are locked in an increasingly public feud, and while it may have the flavour of tabloid gossip, markets clearly aren't laughing. Tesla shed 150 billion in market cap last week. That's not a typo. And just as XAI Musk's AI adventure was hitting Wall Street to raise serious capital, the spotlight got hijacked by Elon's rants. At first glance, this looks like noise, but look deeper and you see reputational risk, political risk, and market fragility converging. Al, how are you reading this? Is this just ego on parade or something investors should be worried about?
Um, Definitely, it's ego on parade, or both. It's definitely ego, and there is also other things that are getting affected. Both Trump and Elon Musk have got egos, and almost from day one, you could see that it wasn't going to work. Or, I bet a lot of people around the world thought, how's that going to pan out when you've got two people who are used to the press, being the highlight of every conversation. So that was always going to have, they were going to headbutt. But it's the flow-on ramifications. It's almost like, America's been hard at it. They've been the number one economy for the world. They've nailed capitalism and all that sort of stuff. So the only thing they can debate now is egos and arrogance and money. It's just we're at a different spectrum to, say, China's trying to get things off the ground. So for me, the points about all this are things like, the line is being blurred between government and private enterprise, which is very similar to China. The large conflict of interest that's involved with this headbutting that goes on. You can see it on Tesla shares. Here's Elon Musk running around the world and the share price is dropping by 150 billion. I mean, it's all right for him, but other people who put their life savings into buying, Tesla shares would not be happy. So the imbalances between haves and have-nots over, 50 years of being incredibly successful as a country is now a big problem, and they have to solve it, but they're not even dealing with it yet. So that's ahead of us, and it's got to be sorted out. If you look at the BBB or whatever it is, the big beautiful package that he's putting out there, it's giving tax breaks to Bill. He's giving tax breaks to billionaires. Well, to me, I look at that and they've lost the plot. There's a huge difference between haves and have-nots. They've got to be dealing with that. You don't give the haves a tax break. So that's I don't think going to end well. It's almost like, when I look at that, it's almost like America is starting to behave like China in order to compete with China. It's a little bit like treat people how the way you want to be treated. The only way you can deal with, say, a country that's got so much cheap labor and there's no opposition and they can make decisions very quickly is almost assume the same sort of environment so you can compete with it. So I see that. I just, look at it in despair more than anything.
All right, Al. Well, let's zoom out and connect the dots.
Yep.
This week, the edges were sharp, and they weren't just market noise. Here's what stood out. Petrochemicals have become ground zero in the next phase of the US-China trade conflict, with tariffs and bans hitting billion-dollar flows in the supply chains. Grid infrastructure and energy sovereignty have moved from technical concerns to national security flashpoints, raising real questions about hardware trust and resilience. China's domestic demand slump is tipping into deflation, what with producer prices falling and industrial overcapacity starting to buckle sectors like EVs. The EV space itself is on thin ice, with oversupply and price wars pushing weaker players towards default territory. And perhaps most provocatively, political risk is bleeding into capital markets, as we saw with Musk, Trump, and the ripple effects on tech valuations and investor confidence. It's a lot, and it all feels interconnected, Al.
Definitely, it's humongous. When you read those points, as you read them out there, they're just ginormous points that are going. Each one of them have the potential of turning the world upside down, really. And this is not going to stop anytime soon. So it's all interconnected for sure. It will affect currencies. It will affect volatility. It's going to affect interest rates. Like, if you throw on top of all that is the volume of debt. So there's not much capacity for people to be able to cope with things. Governments, if they're still spending money and wasting money, then they're foolish, because at some point this is all going to hit a brick wall, I'd say. And just read those points out there; they're unbelievably big points. So the difficulty is really trying to work out how it will all pan out. what does it really mean? Are we all going to go back to being, cocoon our little economies away and become individual countries and no globalization at all and not trade with each other? Or we're going to have this, as you mentioned, strategic fragmentation? Or are we going to just move to a better spot, have this bun fight, we all, headbutt and we argue and carry on and we have these big economic debates and talk and everyone sort of adjusts. We start reining in the issues that we've got. We deal with the issues and talk them through so that we can get to a better global environment, a better globalization that we've currently had, because we haven't paid attention to each individual country. We've just blindly ran in. We've got global monopolies now, which aren't good. We've got tax issues, which aren't good. Everyone's got to deal with, covering their debt, their budget deficits and their debt positions. When we've got tax, you've got large companies who take, volumes of revenue out of Australia and don't pay anywhere near the tax they should. So that's a big issue when you're trying to balance a budget and stuff. So all of that together means everybody's going to have to adapt, right down to individuals, households, too much debt everywhere. And the pecking order globally is now changing. The old analogy, the deck chairs are changing, definitely.
Beautifully said, Al. Well, that's a wrap for this edition of the Weekly Edge. Thanks for tuning in, and as always, watch the edges.
Thanks for tuning in to the Weekly Edge. At Gilt Investments, we're here to help you navigate the fixed income markets with clarity and confidence. As an Australian fixed income brokerage licensed to advise and deal in fixed income securities, our experienced team is ready to help you reach your investment objectives. We hope you enjoyed this week's Edge and that it helped keep you in the loop and ahead of the curve. Until next time, stay sharp, stay focused, and we'll see you on the next episode of the Weekly Edge.